Welcome, curious minds, back to the deep dive. Wow, okay, so this past week, pretty packed with some really significant shifts in the crypto and blockchain world.
Absolutely. Things are moving fast.
They really are. And, like always, we're here to cut through the noise, pull out the key stuff you need to know from the sources covering roughly July 28th to August 4th, 2025. Think of it as your shortcut to getting up to speed.
Exactly. And we're not just listing headlines. We want to help you connect the dots, understand why this stuff matters, and see how these different events, well, how they fit together in the bigger picture.
Couldn't have said it better. We've got policy changes, huge institutional moves, market swings, you name it. So let's kick things off with some big policy news. Indonesia.
Ah, yes. The tax changes.
Right. They've basically doubled taxes on crypto mining and trading. So the trade tax went from 0.1% up to 0.21% for local trades.
And quite a jump for foreign exchanges.
Yeah, up to 1% there. And then mining VAT, that also doubled 1.1% up to 2.2%, all kicked in August 1st.
You know, this Indonesian move, it's interesting. It's not just grabbing tax revenue, though that's part of it, I'm sure. It's also kind of a backdoor legitimization, isn't it?
Yeah.
By setting up clear tax rules, they're implicitly saying, okay, this is a recognized economic activity.
That's a great point. So it could actually encourage more local involvement.
Potentially, yeah.
Yeah.
Provides a framework. Other emerging markets might be watching this, thinking about how they can both, regulate and maybe foster their own crypto sectors. It's a balancing act.
A delicate one. Okay, and sticking with policy, huge news out of the U.S. as well. The Trump administration dropped this very detailed White House report on crypto.
160 pages, I saw.
Yeah, quite hefty.
Yeah.
Outlining policy recommendations, the stated goal, making the U.S. a global hub, a leader in blockchain. Now, the sources say it has industry backing, lots of insiders involved, but there are also critics flagging concerns about regulatory capture.
Right. The idea that the industry itself might be shaping the rules too much in its own favor.
Exactly. And just to be clear, we're relaying the information from the sources here, not taking a stance either way.
Of course. But the sheer detail in that report, 160 pages, it suggests they're thinking very seriously at a high level about how blockchain fits into the whole national economic picture.
Definitely.
The big question, though, is the execution. How do these recommendations actually translate into rules that, genuinely encourage innovation while protecting consumers and keeping the financial system stable?
Tricky.
A tightrope walk, like you said. And this really sets the stage for the next big announcement from the administration this week.
A national reserve.
Yeah. A national crypto reserve is coming online, initially holding Bitcoin and some other selected digital assets.
Wow.
Again, just reporting what was announced. But that's a major, major shift, isn't it? A sovereign nation officially allocating assets to crypto.
It's monumental. It moves the conversation from, should we regulate this, to how do we strategically hold this? That's a different dimension entirely. Totally different. Okay, let's pivot now. Away from government policy, more towards institutional confidence. Because we saw a lot of that too. Syz Capital.
Oh, the BTC Alpha Fund.
Right. They're reopening it October 1st, and the target is pretty ambitious. 2,000 Bitcoin.
Which is what, around $200 million at current prices? Roughly.
Roughly, yeah. But here's the kicker. Even before it reopens, 1,800 BTC are already spoken for, reserved.
Wait, 1,800 out of 2,000? Already?
Already, by institutions and family offices. It's nearly full before the doors even open again.
Okay, that's genuinely staggering. That level of pre-commitment, it really makes you wonder, doesn't it? Are these big players now just comfortable with Bitcoin's volatility for the long haul?
Or is it something else?
Or is it still mostly about shorter-term plays, arbitrage, things like that? But with numbers that big, 1,800 BTC, and it smells like real conviction, something beyond just speculation.
It really does feel that way. And it's not just funds like Syz. Look at corporate treasuries. BTCS Inc. made a big move.
With Ethereum,
Yeah.
right?
Yeah, they loaded up, added about 14,240 ETH. That brings their total stack to over 70,000 ETH.
70,000. What's the value on that now?
Around $270 million. It's huge. And the way they funded it is also interesting.
How's it go?
Through a $10 million convertible note.
Ah, Okay. So debt that can convert to equity later.
Exactly, which often signals, the company really believes the asset's price is going up. They raise cash now, potentially dilute shareholders less later if the valuation climbs.
That's smart. It's a sophisticated play for a public company. It's not just dipping a toe in, it's an aggressive accumulation strategy.
Hmm.
Really speaks volumes about their long-term view on Ethereum's potential, its utility.
For sure. Okay, so BTCS, that's a strong corporate signal. But what about like everyday use, making crypto easier for people to actually spend?
That brings us to PayPal,
You got it. PayPal launched their new Pay with Crypto service, and the details are pretty impressive, near instant settlement.
which is key.
And they're claiming it slashes cross-border transaction fees by up to 90%. 90.
90%.
Yeah.
That's huge. Think about international e-commerce, freelancers, small businesses sending money across borders.
It removes so much friction, right? The cost,
Yeah.
the waiting time.
Exactly. When a massive mainstream player like PayPal steps in like this, making it that much easier and cheaper, it basically smooths the path for wider adoption. It's a massive endorsement.
Huge signal. And it feels like the serious money is also piling in, looking beyond just Bitcoin and Ethereum sometimes. DeFi saw big inflows.
Yeah, the numbers were pretty eye-popping. DeFi hedge funds collectively pulled in, what, $322 million just last week?
$322 million. Plus you had Strategy, that's the name, closing a massive $2.52 billion IPO. Their plan, hold over 21,000 Bitcoin.
Wow, $2.5 billion just to buy BTC.
And then you had others like ETHZilla, FG Nexus building up these huge ETH treasuries, hundreds of millions worth.
You know, the sheer scale of this capital flowing into DeFi specifically, it suggests something more than just speculation is happening.
Like what?
Like maybe a growing confidence in the underlying tech, the security, the way these protocols can connect and build on each other composability. It feels like institutions are moving past just experimenting.
That they're building real strategies around this now.
It seems like it. Integrating DeFi into their broader financial approaches Right. in a way that looks more long-term than what we saw in earlier cycles.
Okay, that makes sense. And the broader market certainly felt energetic this week. Despite some bumps, we saw that big rebound.
Right. The global crypto market cap jumped about $102 billion in just 24 hours around August 4th.
Pushing up from, what, $3.59 trillion towards that $3.73 trillion resistance level?
Exactly. And Bitcoin itself was trading around $114,800 at that point.
Yeah.
When you see bounces like that, especially after periods of, FUD, fear, uncertainty, doubt, it suggests the market psychology might be shifting.
That's a
It's not just FOMO buying. It looks more like conviction. People seeing dips not as a reason to panic sell, but as strategic moments to buy more. Accumulation. It hints at a potentially stronger base, a stronger floor than maybe we've seen before.
interesting perspective. And Bitcoin itself, it showed that resilience, consolidated around 118K after hitting some higher points earlier in the week. And you still hear those price targets, people talking 142K, fueled by that ongoing bullish feeling.
Definitely a lot of bullish sentiment out there. But, and this is important, the crypto market isn't in its own little bubble. Right?
Not entirely, no.
We saw that this week too. Crypto-related stocks took a hit. Coinbase down 17%. Bitcoin slipped back under $115K for a bit.
And that followed the weak jobs report data and news about rising tariffs.
Exactly. Macroeconomic factors. Traditional market jitters. It forced investors, even in crypto, to get a bit more defensive. So even with all the institutional money coming in, it's still vulnerable to those bigger economic wins.
That's a crucial reminder. So, okay, let's try and pull this all together. We've covered a lot. Policy shifts, institutional buys, market swings, new services. What's the big takeaway from this packed week?
Well, I think
It feels like things are just accelerating, doesn't it? On multiple fronts at once. You've got governments getting seriously involved, Indonesia's taxes, that huge U.S. policy report, and then the National Crypto Reserve announcement. That's massive.
unprecedented, really.
Right. Then you have the institutions, not just dipping toes, but diving in. Syz, BTCS, the DeFi funds, Strategies IPO, Syz Capital, strong conviction.
And the market reacting, bouncing back strongly, but also showing it's still connected to the wider economy.
Yeah, the rebounds, but also those dips tied to jobs data and tariffs. So it's this complex mix.
It absolutely is. And
Yeah.
if you
Yeah.
connect all these threads, you see it's not just random noise. These shifts are interconnected. Understanding these nuances, how policy influences adoption, how institutional flows impact price, how macroeconomics still plays a role, that's really key to figuring out where things might be heading.
So it's about seeing the whole tapestry, not just the individual threads.
Precisely. And that leads to the big question, maybe the one for you, the listener, to chew on after this. We're seeing sovereign nations deciding to hold crypto reserves. We're seeing institutions embrace these assets at an accelerating pace.
Mm-hmm.
Given all that, what new questions does this raise, not just about crypto, but about the future of traditional money, about fiat currencies, and maybe more personally, what does it mean for your own financial thinking, your strategy, in a world that seems to be decentralizing faster than ever?